All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're coming at you guys with another Tycoon talk. This is going to be episode 9. And if you're new to the series, we typically go over stocks, we go over bonds and crypto, some of the different things that we're looking at in the market. And if you missed the last episode, you missed a really good one. We pointed out how some of the treasury yields had a major divergence and how that divergence could possibly lead to stocks, bonds, and crypto rallying. And since that video, a lot of the price targets have been met, whether it's Bitcoin, whether it's the S&P 500, different things like that. So, make sure to like this video, subscribe to the channel so you guys don't miss out on any future videos. Before we hop further into it, just have to read you guys a quick disclaimer. The content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. We are not registered financial advisor or brokers. Trading in stocks, bonds, commodities, crypto involve a significant risk of loss and is not suitable for all investors. So make sure to read the full disclaimer before watching the video. And we're going to go ahead and jump straight into it now. This is the 2-year treasury yield, and this thing, it moved like a freaking stock. Okay, it moving like a almost like crypto, right? We saw a 30% drop in the 2-year treasury yield within about a 1 week time period, and that is major, guys. That is a very big move, especially for treasury yields. And the reason this was significant, all right. And how essentially we were able to spot this before it happened was not only did we have this slightly horizontal, head and shoulders right here on the weekly time frame. This is the weekly chart right here. But we also had this bearish divergence where we were creating these highs and lower highs on the relative strength index while the actual treasury yields were going up. This is a simple term known as bearish divergence, and it's something that we use a lot within the Discord. Not only did we have this bearish divergence, you can see we actually got a very textbook break and retest of our trend line and then ultimately pushed down lower. So a lot of the technicals, especially in the bond market, the technicals tend to be pretty well respected. And there were a lot of technical signals flashing. And as treasury yields drop, the price of bonds typically go up. And sometimes you see the stock market go up as well. And, we were speculating that perhaps this would lead to a rise in, stocks, bonds, and crypto. And if we actually take a look, this is the 2-year treasury yield here in the actual candlesticks. And then we have crypto, Bitcoin, and specifically here in orange, we have the stock market in SPX, and we have TLT representing the bond market. And you can see that in this time period, all right, the 2-year treasury fell 18%. The S&P 500 was up almost 5%. TLT was up about 6%, and Bitcoin was up an amazing 37%. So, using some of these signals, using some of these different indicators is going to be really useful. And really help give you that edge that you need in the market. All right, because trading specifically is like going to battle. It's like going to war. Right, you got to have the proper weapons at your disposal, and then you need to know how to actually use those weapons to your advantage. That way you can give yourself an edge and increase your odds of success on the battlefield that is trading. Now, before we hop into this next chart, I'm actually going to go ahead and let Leon get into some of his things. He's got some really good stuff for us. So we're going to go ahead and hop on over now and take a look at what he's got for us.
All right, all right. So I'm gonna hop over to share my screen. All right, so I'm gonna hop over to SPX, right? SPX is the S&P 500 futures or Standard & Poor's 500 futures. It's like, well, basically the top 500 stocks. So I like trading SPX instead of SPY, but you can use this for SPY as well. What we see right here is the Wyckoff accumulation scenario that we see on the weekly chart. So we were actually calling this out months ago, but we wanted to see it form. And now that we have it like kind of almost fully formed, I want to kind of point out how we might be able to time where exactly the bottom is. And what's going to happen just by looking at this. So one thing that I say in Discord, since SPX is like almost my bread and butter, I want like a Kobe, like Mamba mentality. So I know that the S&P 500 futures are going to be $31 more than SPX, okay? So if you're charting the S&P 500 futures, because they're like 23 hours, that's going to be $31 more than SPX. If you want the same targets, you only want to chart one thing, that's how you do it. And then if you want the the SPY time frame or the SPY price levels, you just take that last number off of the S&P 500 futures, and then you subtract 2. So if it's at 4105, take that 5 off, and then it's 410. Subtract 2, then your spot target is 408. So that's just a little something that I do in my mind. So right here, you'll see the preliminary sell off, and then you'll see that selling climax. Selling climax, you'll see went straight down. That's exactly what it's supposed to do. All right. Now everybody and their mother had this trend line right here, right?
Yep.
They had that trend line, but they didn't even realize, and I'm gonna give you the reference too. They didn't even realize that we were actually in a Wyckoff setup. So I actually, me and Zach was talking about this earlier, and just wanted to see, okay, you got the automatic rally right after the selling climax, automatic rally, big bullish candle right there, and then you had that sell off again. So you could see it actually sold off right there at that 21 EMA, but we have that as the resistance. Boom, secondary test, right? So goes back up above the automatic rally, makes another, rejection at the 50 SMA, and then makes another secondary test. Now you'll see on the Wyckoff schematic setup, sometimes it'll be the secondary test first, and then like it'll vary, but you have to use your discretion. So this is actually what I'm looking at right now. Secondary test right there, secondary test right here. Some people think in October that was the low, that was the spring. The spring is actually what springs it like a trampoline or like a slingshot actually, and makes the market go bullish. So I think that, the spring is similar to a slingshot. The more it gets pulled back, once it lets go, you're not gonna go back there. You're just going forward. So that's what people are looking for, and that's what they thought they found right here. I don't think that's where we're at. I think we're at phase B. And as you can see, we have the actually, let me show you this real quick. We have a little bearish divergence right here. So let me remove that. I'm gonna just do this in a moment. I kind of want y'all to see this. So we have a little bearish divergence right here. All right. Boom. As you can see, that's lower, that's higher, that's higher, that's lower. All right. Pull it back out a little bit so you can see it clearly. All right, so that's a little bearish divergence right there, but we actually popped up again. Okay, so what does this turn into? This actually turns into a head and shoulders. Okay, so we're using everything that we know. Everything works together. Some people specialize in one thing. We kind of try to specialize in, one thing and master that, and then move forward to another thing. Because once you have a certain set of tools at your disposal that you master, you can utilize more instead of just waiting for one setup. So boom, we have this possible head and shoulders right here. I say possible because I was waiting to see if it, we were waiting to see if it went above this January high. It did not. It did not. And actually it made a doji on the weekly chart. That's the weekly chart. Okay. So we know what the dojis are, but what we call dojis are reversal candles. Like once you see certain things, you'll know ahead of time, like, okay, when I see this, this means this. So a lot of people might make it like complicated. Hammer candle is when you see a hammer candle, the bears are, hammer candle or inverted hammer candle, doji, all reversal candles. So whenever you see them, reversal candle, you see a hammer candle right here, reversal. Inverted hammer candle, reversal. You see? Spin the top, like spin the top doji, reversal. So that's what we're looking at right here. And then to kind of chime in, well, actually, let's look at this real quick, and then I'll go into the daily. So we see that this is kind of stalling out right here. We want to see if it kind of breaks above this level right here to exceed this high. If it doesn't, that's the level we're going to look to short at. So that level is 41.77 on SPX. So remember, that's going to be 415 on SPY. Okay. So we're looking at 415 on SPY and 41.77. If it breaks above those levels, then okay, cool. We have our next resistance up here at 43.25. Now, I don't think it'll get up there because above 43.25, bull market. So remember I said that if we don't drop, if SPX gets above 43.25, like go long, like not even playing. It's time. So that 43.25 is the key level that you want to look for if we get above 41.77. So we're looking for this big drop that's going to probably zigzag, but all the way back down to possibly here. Okay. The 3,300 area, somewhere around 3,400, 3,300.
Yeah, and real quick, I just want to let people know that we've got a lot of catalysts coming up, right? And
Mhm.
especially when it comes to this inflation data. So, that could be some of the driving force, that really, pushes us up towards that 4,300 area, or it could be some of the driving force that brings us down that he's speaking of. I mean, nobody can really predict the data and forecast it perfectly, but you have to realize that there's going to be multiple different scenarios, and so you need to be prepared, and a lot of these catalysts coming up is going to be ultimately the catalyst that propels us into the next move, whether it's up or down. So, sorry to
Exactly.
cut you off.
No, you're good. You're good. You're good. And exactly, that's why we try to go, with multiple different scenarios, upside or downside, figure out like chess, everything Queen's Gambit. We want to figure out all the moves that can happen prior to, so that it doesn't surprise us when something happens. It's like, okay, you lost out on this trade, but I think trading is like football. It's a lot like football. You have your
Yeah.
game plan, the fundamentals. You got to learn the fundamentals before you get your playbook. Then you get your playbook. Now you can run your plays, but you're the quarterback of your own portfolio. So you got to read the defense. The defense is a chart. So if the defense is telling you, man, you know what? They're going to rush. I'm in a passing play, you have to call an audible. So you might take a loss of yardage.
Mm-hmm.
Just got to get that first down, not
Peyton Manning, baby.
touchdown.
That's your new
First
name,
down.
actually.
Yeah. First down, not the touchdown, because a lot of people will revenge trade and go for the touchdown. No, so we look at all these scenarios. So right here, we're looking at this week being the start of the drop. We know that there's a lot of levels in between, but ultimately we can drop to around 34, 3,300. And then after we drop below, that'll be, let me see, December lows right here and October lows right here. After we drop below October lows, that is when it's probably going to be game time, most likely. Okay. So once we drop below October lows, that's when you want to, start looking for those stocks that you want to invest in long term. People think it's going to go way back to like 2,300. At once upon a time, I was one of those people. But once I looked at the chart, it's like, okay, we're going to take out October lows and December lows. After we take out October lows, that's when it's going to be go time. So I'm saying
What's
it
up, Todd?
to not, what's good, Todd? I'm saying it to not be redundant. I'm saying it to not be, go over it over and over. But I want you to really understand when it happens, when we drop below October lows, if we drop below October lows and we don't exceed, 43.25, we drop below October lows, that's when you want to grab your shares of, VOO, like VOO, or, SPY, or that's when you want to grab your 2025, or by that time, it'll probably be like 2026 contracts, like that's when you want to, start your long-term 2-3 years out investments of the SP 500, because when it's blood in the streets, like Rothschild said, Baron Rothschild, it's time to buy. So nobody's going to be thinking, okay, we're going to exceed all-time highs. I think we're going to exceed all-time highs this year if the conditions are right. I think we could. We just need to drop first. We don't want to talk about, the how the credit is how the credit is altering what we're seeing in the market and stuff like that. But the credit, and we literally need to see this drop first. I don't want to go too deep into it. I want to make it simple. We need to see this drop in order to pop. It's like a slingshot. So we're in phase B, and I don't want to take too long on this, but I just want to be thorough. We go to the daily. Now we're seeing that head and shoulders a little more right now. Now it's looking a little more formulated. Boom, head, or left shoulder, head, and then right shoulder being formed right here. Even if I don't think this is a head and shoulders, all right? A lot of people don't like patterns. A lot of people, they trade with gamma and stuff like that. We trade with everything that we know. So even if I don't think that's what it is, right here, I have the trend line. All right. So if you trade with trend lines, you'll know right here, boom, trend line, it's actually making higher highs, higher lows, right? But once we get that change of character or that break of structure, once it breaks this right here, all over, right? That's when we start the descent. Do we know where we're going? We know we have an idea, but we have the bearish gap right here. So we can play this gap right here at 39.77. Remember I said take the last number off, subtract 2. So it's 33.95 for SPY. So once we break this, you can grab 395 contracts to try to play that gap fill. even if you don't get to the gap fill, you'll probably be at 50%, 100%. A lot of people have different parameters for grabbing options. They look for the delta, and the delta is how much money you. It can all be so simple if you know what your targets are. So
Yeah.
just to not get too complicated into it, that's what we see on that. And then down here would be that weekly
Trend
head
line.
and shoulders for the trend line. Yep. And then breaking that would give us further confirmation. So that's what we see on there. If we actually look lower on the 4-hour time frame, we'll actually see how we cannot get above this high right here. Okay. So even if I wanted to put this high right here, let's put a yeah. Even if I wanted to put this high right here, I'm a perfectionist, so sorry. All right, boom. Even if I wanted to put that right there and just wait, it's the 4-hour chart. So we don't have anywhere to go. We don't want to take the wrong trade. All right, let's see if we exceed that high. If we have trouble at that high, that's my optimal entry level. That's my optimal entry opportunity is what I call them. Optimal entry opportunity. So if we have trouble at that high, if we even go above that or go towards that high, then if I'm already in puts contracts, which I already am, that would be my average down level. And then that's when I would say, okay, boom, I would average down on something. A lot of people don't average down. Me, if I feel confident in my move, which I do, that's what, I would do. Or if you're not in any, short contracts, that would be your optimal entry opportunity to gain profits right away. If we exceed that level though, once again, chess, Queen's Gambit, we exceed that level. We're using that as support. We're looking at this level right here, which is 41.77, and using that as the next resistance and seeing if we get above that. If we don't, same concept, but it's not going to keep pumping. The reason why, actually, let me go to /ES to show you why it's not going to keep pumping. And then I'm going to, you want me to turn it over to you or because
No, yeah. Keep going over the S&P. I got some individual stock charts that I'll go over.
Okay, so let me give you a clean chart right here. Blank. Nope. Oh well, let's clear this chart. All right, so this is why it's not going to keep going up. Do you see the volume right here? You see
Yeah.
the volume, how it actually it pumped. It's super pumped because remember the hammer candle, reversal candle, right? Started going up. Then we see the volume that's like, cohesive with that pump right there on that hammer candle by volume. And all we did was decline in volume.
Yep.
So all we did as we were pumping, we declined in volume. So that tells you it's a weak trend because we don't have the buyers to maintain it. If
Yeah,
you
and just for some of the beginners, like what he's really pointing out there is you can see that there's a steep incline in the price, right? And
Mhm.
so a strong uptrend is suggested by, if you're in an uptrend, the price should be going up like this, and the volume should also be doing that. But what we're actually seeing right now is we're seeing price on a very steep incline, but volume is on a very steep decline.
Mhm.
And I've mentioned in a couple of videos, there's a lot of people, and institutionally wise,
Mhm.
there's lots of institutions that are heavily overweight cash and underweight stocks.
Mhm.
And these people have to report to their clients, to their investors. And so they may be taking a little bit of that cash and saying, hey, yeah, well, in March, at the end of March or mid-March, we went ahead and we bought some of Nvidia, right? Or we bought some of the S&P 500. We bought some of the Qs, right? And that way they can show their clients, be like, yeah, no, we didn't miss out on that rally. We were
Mhm.
a part of that rally. We were able to make a couple, percent profit. But in actuality, you're seeing that declining volume, which is not, something that you really want to see in an uptrend. You want to see volume show that as well, and also go in an uptrend. So just kind of wanted to explain that a little bit more for people.
Right. And honestly, I think we come back to this level right here. 36 and some change. I think that's where we're one of our first stops in between all of this, muddiness right here, probably like 4,000 area. But I'm not opposed to it popping above like 41.77 or like going to 4,200. Not opposed to that, but it's not going to be sustained due to the volume. So that's what we're seeing on that. And I actually want to go back to SPX to show you a comparison of the weekly chart and give you kind of a look at what we were looking at. So boom, that's the white cloth right there. Now keep that in mind, right? So I'm gonna pull up on this other chart. Excuse me. So we have a couple of different schematics for the white cloth, but this is pretty much what we're looking at right here. All right, you see how crazy that is?
Mm-hmm.
So what we see, let me make it a little smaller so we can have. So what we see is pretty much cut and dry. Preliminary sell off, and then remember I said selling climax. It
Yep.
usually goes below the secondary test, but we're not going to let that fool us because we know the market, gives us what what we want or what we need. So we're not going to think we're smarter than the market. That's not what it is. Okay, cool. Selling climax can be higher than the secondary test. Automatic rally. Cut and dry. This is where we're at right here. So right here, phase B is where we're at.
And that's
And
kind of almost a head and shoulders right there too.
you see
Like
that?
on the accumulation chart and right there
Right,
in the middle, which is pretty much where we're at right now. We're at that right shoulder.
right. And that's exactly what we're looking for, or why we're looking for the drop. Now, an alternate accumulation schematic would be this schematic number 2, which would show that we just do not take out that secondary test or create a spring, and we just gradually go bullish to go to phase, D and E. All right. So what we're looking for is to see if we actually drop below this. If we drop below this swing low. If
Mm-hmm.
we don't drop below this swing low, then it's going to be schematic number 2, which is right here. And we would probably be going towards an accumulation phase for a couple of weeks until we get whatever catalyst that's coming. So no, if we don't take out that
That's
low
probably
right here.
more of a little bit of a bullish earnings earnings season scenario versus the
Mm-hmm,
first one would be a little bit more of a bearish earnings season scenario.
mm-hmm,
Because we are basically starting another earnings season right now, and that's gonna affect stock prices in a pretty significant way. I mean, for the most part, we've been seeing earnings hold up pretty decently, and everyone's been calling for this big crash in earnings, but we really haven't gotten that yet necessarily. I mean, there's definitely been companies that have had that, but compared to the S&P 500 as a whole, we haven't really got that. So if we do get bad forward guidance, maybe this quarter or next quarter, that could bring us into that bearish scenario where we get that spring down. And if earnings hold up pretty decently, then we could see that second schematic play out. So I mean, we'll be ready to trade these, for either scenario. We'll be waiting. So that's the whole point of kind of doing these is not being too biased to only one scenario, and
mm-hmm.
ultimately just being prepared for all scenarios so that way you can really profit no matter what.
And I definitely agree. And I'm bouncing over to Bitcoin a little bit. So Bitcoin, we mentioned on the last video that once we get above that breakout level, boom, it's go time. And you look at that huge breakout candle right there for that week of the March 13th. Broke
Mm-hmm.
out. And then what I always like to do, I'm very particular, so I'm actually show you this on the on screen right here. But I like to be as accurate as possible. So I'm gonna show you this. Like I could draw a support level right here or like a resistance level right here. But what I want to do is I want to do 30, 32, 462, because that's how accurate my levels are. Mine is 24, 938. That's that. Divide that by 2. Add that to 24, 938. All right, 2,800 and 28,700. Watch this. And then 28,700. See that?
Yeah.
That's my resistance right there. So these levels for me are so accurate that once I get there, it's like literally I could probably zoom into the 4 hour and show you just how accurate that is. See that? So got above, couldn't hold above it. Boom, 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 boom. It's like 13 tests, like 20 tests. This whole line right here got smacked down like Ike Turner.
Yeah.
Right. So what we're looking at on the monthly, everybody's like, oh my gosh, like Bitcoin is going to the moon. It's not, but it could, because this big falling wedge on the monthly, as you can see, is squeezing on that. I have TTM squeeze, but it would be the same as MACD, right? So I'm looking at this right here because this is the swing low. That was the consolidation on the weekly chart. That's the swing low. Now, if you look at the stochastics, you'll see how it's way down here, right? Now, I'm
Yeah.
thinking we drop and we probably get back down to the breakdown, but we make a higher low on the stochastics, causing it to create a bullish divergence. So I'm thinking, everybody's going to think, oh man, crypto's crashing, but it's actually, maybe in a month or two, like going to crash back down to the breakdown to create a bullish divergence. And it's actually just retesting this huge falling wedge. So once you see it right down there at like 15,000,
Yeah, breakout and retest.
That's when, yeah, exactly. That's the breakdown, that's the retest. And then also on the daily chart, you'll see how we have a small gap. Couple things on why. Got a small gap right here at 20,145, right? But not only that, you see all of those retests right there on that trend line that I just drew with math. And then we go down here and create that bearish divergence right there. Boom. So if you're trading, boom, bearish divergence. So if you're trading Forex, or like, if you're trading Bitcoin futures, or I think they have that new ETF BITO, which is off of Bitcoin, BITO, they got options. If you're able to short on the crypto market, like it's there, like it's coming. And even if I wanted to utilize all of this that I'm looking at, let me take this back a couple of days real quick and show. Let me see. I'll take it back to February. Yeah. All right. So even if I wanted to do this, excuse me, I can go right here and say, all right, boom. And then I could say, hey, if we don't break down below this trend line, then we're going to go bullish to where? That trend line that I already have. But we see that bearish divergence. So I'm making this trend line so that I can go down to the 4-hour or the 1 hour, excuse me, and actually look at how close that is. See, that's the 4-hour. That's crazy. Let me see the 1 hour. Yeah, so I can see, I can even adjust it. All right, boom. If we drop below there, then I'm bearish. So if you're looking to short and you need to look at where your entry is going to be, and your prime entry for shorting Bitcoin, it's not you going against the monster or the machine. It's you actually just making a educated assessment on what you think is going to happen. You can see we had this bearish divergence right here. Boom, lower high, higher high, higher high, lower high. It dropped, but it didn't get below a certain level, and it just popped back up. So we could do the same thing here, or we could have that major drop that I'm thinking we have on Bitcoin.
Yeah, I actually have some really good charts here on Bitcoin I'm going to get into real quick.
Okay, I'm gonna stop sharing.
While we're on the topic of it. So when you talked about that drop and that level that I wasn't able to get below, this is the Bitcoin daily chart right here. And that was actually the 50% retracement level. So like you as well, I was able to also spot the divergences, right? Where we have the highs, the higher high indicated by these circles right here. But, we had bearish divergence on the relative strength index, bearish divergence on the MACD. All right. And, these channels right here, these are algorithmic buying channels, right? And so about 70% of all trading, even in the stock market, is actually fueled by algorithms. Okay. So, what I see here is, we have this buying channel and we break below, okay? And, we come down and test that 50% level, and on the daily, the candles really close there. To me, this is a clear form of a liquidity grab, right? So you have the algorithmic buying, but there's not enough liquidity to come up and hit our bullish price targets. Now you can see, the price targets were really well respected, and we actually came up, and this was the peak right at my bullish price target here. But they didn't have the liquidity necessary to push things up into that price zone. So what they did is they did a liquidity grab. And so, kind of similar to you, I'm watching a trend line. My trend line is off the initial tops here, but also, once we break this trend line, we're going to have another move down. And so people just need to be cautious that it's not another liquidity grab as it was over here. We have our major retracement levels of support, former supply zone in this area as well. Former supply can turn into new demand. So we could see a liquidity grab and really push back up. But, you know, if we don't find buyers through here, then we're going to, you know, have a pretty significant drop and most likely retest some of our previous lows. And, you know, what are some things that can fuel this right now? I mean, I'm not overly, you know, one-sided on things. You know, we are still in this algorithmic channel right here. And if we break above 29,250, you know, we definitely could head up into the 30,000 territory, even like 32K. Leon's got a level right around there as well. This is the weekly chart though, but I want to give some perspective to some people. So, you know, what we're looking at here is this was the bull market, guys. Okay. And so we can see all of the lows of the bull market is highlighted here by the supply zone. And, you know, this is the bull market liquidity essentially, right? So anytime that they really want to push Bitcoin up into that $60,000 area or above, this is where they get the liquidity from, right? This is where all the whales and all the algos are gathering their liquidity to make these massive pushes to the upside. And once we really broke through there, you can see that, you know, we are actually now testing these liquidity levels, but we're in a bear market.
Look at those legs, though. You see those legs over there? Crazy.
Dancing, bro, dancing. And so yeah, so this prior bull market liquidity does have a good chance of being bear market liquidity for the next leg down. If we take a look here, we have the fibs again as well for the downtrend. So we have our swing high connected to our swing low. You see we move down, we retrace up towards the 38.2% level, and we have 3 candles, guys. 3 candles on the weekly time frame, and then ultimately we start our next move down. Markets love to move in 3-wave and 5-wave structures. And so we had a nice 1, 2, 3 right here. Okay. And it is possible that this is setting up to be a 5-wave structure, a 1, 2, 3, 4, and then 5 back down to these levels. Pay attention to how, you know, last time on the weekly chart, we had 3 weekly candles right at our 38.2% retracement level. And then we had the sharp move down. We're right here, 3 weeks of dojis. I mean, Leon spoke on it a bunch. These are reversal candlesticks, right? This is the market showing indecision, you know, not really sure that it's ready to push price up higher yet. Now, price can go higher, but look at the last time we had a doji, and it's right here at the 38.2% retracement level. So if history wants to repeat itself,
real quick, I'm so sorry, but you are spot the fuck on. But also, do you see the head and shoulders with the bearish divergence right there with the retest?
Oh, where? Oh, right here.
So that what you have circle right there, left shoulder, middle, head, boom. Yeah. And then look at the stochastics or the MACD that you have down there. Bearish divergence.
Bearish divergence.
That first target that you had on your fibs, that's the first target. The retest is actually the dancing of the, you know, dojis right now. So it goes along with what you're saying as well, however you look at it. So just wanted to say that, my bad.
No, you're good. And so I actually have some really good data that other people, I haven't seen anybody actually really put this data out. I think I'm like the only person who covers this, but you can spot a bull market in cryptocurrency and a bear market in cryptocurrency by taking a look at 2 other things, right? And one is specifically the DeFi market, and the other one is the altcoin market. And so signs of a bull market is DeFi outperforming. So what I've got here on this chart, all right, this is since the beginning of 2023. All right, so this is since the new year has started. The white line is DeFi. All right, the blue line right here is the altcoins. So what this is this is a total crypto market cap minus Bitcoin and Ethereum. So you know, Ethereum is technically an altcoin, but really over time it's really grown into a major token. So I kind of put it up there with Bitcoin. And then we have Bitcoin itself right here, the total market cap. And so when DeFi is outperforming, right? And when DeFi is outperforming Bitcoin, we're in a bull market. You can see we're bullish and we're seeing those things go up. Look at what happened here recently. All right. DeFi is actually underperforming Bitcoin. Okay. And that's significant, as I just mentioned, because take a look at this. This is in the past. This is April through November, and crypto kind of bottomed around November, December of last year. And so this is last year's chart. And what do you see here, right? We're going up when DeFi, the white line, is outperforming the rest. And look what happens as soon as DeFi starts underperforming Bitcoin, right? Literally, as soon as it happens, huge tank in the market. And that's how you can tell we're in a bear market cycle. So when it comes to cryptocurrency, this is something that I really look at a lot, is, looking at the performance of Bitcoin relative to DeFi and relative to the altcoin market cap. And when DeFi is outperforming to the upside, okay, then that's typically, throughout the history, you can go back and look at the data, and that, crypto is in a bullish cycle. And as soon as the DeFi market starts underperforming Bitcoin, okay, then that's when we're in a bearish cycle. And you can see as soon as we crossed over here, right, we had a huge move to the downside afterwards. So that's something that I really pay a lot of attention to. Now, not only do we have DeFi underperforming Bitcoin here currently, but the Ethereum Shanghai update is coming soon, guys. And this is a potential really big catalyst. The Shanghai upgrade, people are saying, okay, and this is pure speculation, this isn't a fact, but people are saying that the upgrade will dump huge sums of Ether into the market. And the reason being is because essentially people have been staking Ethereum for a very long time. And there's about $31 billion. All right. There's a $31 billion stash that's been piling up since the tail end of 2020. And the Shanghai upgrade comes out April 12th, which is also the day that we get CPI and the Fed minutes. Okay, so just imagine if we get a perfect storm of bearishness where we get a hawkish Fed minutes, all right, we get a hawkish CPI report, and the Shanghai upgrade actually does cause a lot of people to dump a massive amount of Ether onto the market. Now, as I mentioned, that's just speculation, okay? The reason they're saying that is because there's been a rally and these tokens have been locked up. So now they're going to have the availability and the choice to sell them, but that doesn't mean that they're going to take that choice, all right? Now, if we look over here at Ethereum, right, I mentioned some of these algorithmic channels and the liquidity grabs, right? So Ethereum also had initially a bearish divergence here as well. We got a clean break and retest, and then that's when we actually pushed up higher. But there's been many times where we've broken these algorithmic things just to gather more liquidity. And we've done it a couple times here. And to me, it appears we could have possibly had a liquidity grab up here to the upside. And whenever you have the liquidity grab on the upside, typically it's followed by a downside move. Where you have the liquidity grab on the bottom, it's followed by an upside move. And, Bitcoin, I showed you guys, was able to hit my first bullish price target and my second bullish price target. ETH, however, was not able to do so. All right. And it did get, a slight breakout above here, but this is also something known as a look above and fail, right? And the reason it's significant is because buyers are presented the opportunity to really push price higher. This is the chance for bulls to step in and really hit the bullish price targets, right? And rather they failed and we're coming back down into this range, into this trading range, and it shows that bears are actually the ones in control right now, for the time being right now, at least. Because even when bulls were presented the opportunity to really push price higher, they weren't there. They didn't take advantage of that opportunity, and there wasn't enough demand. There wasn't enough buyers to really push that price higher. And so we got to look above and fail in this case here on Ethereum. So that's it for most of my crypto charts. There's a couple other things that I want to go over real quick, just kind of stocks that I'm looking at. This is a more of a macro chart for the General Electric stock, so GE, ticker symbol GE. And this right here is 09, guys. This bottom right here is 2009. We can see we have this trend line here that we tested, all right, and we've actually flipped that to resistance now, and it's a very clean trend line that we tested many times over here. It was followed by a very sharp drop, and we're coming here and retesting this trend line again, right? And so what was going to be prior support is new resistance. And not only that, if we look at our MACD, okay, remember, this is 2009, so this is a very macro trend chart. This is 2005. This is a peak on the MACD in 2005, right? And this is the second time, really, that we've actually got above this peak. Now, the first time was in 2021. All right. And then we ended up getting a sharp move to the downside, right? From like the $90 region all the way back down to about $45, $50. So pretty significant move to the downside. And look at what we're doing again. We're still above it. We're back up again, really above this 18-year high on the MACD. So it's a pretty significant level. Now, just because, we're above this level doesn't mean we have to go down immediately there actually is a strong chance that we consolidate as we did previously in the past. But it's definitely something to look for, right? I mean, if we get the MACD sell signal, which is when this red line crosses below the blue line on the MACD, you can see that that was a really good time to short and go short and just have some patience and sit on some short positions, as we saw a pretty sharp move to the decline afterwards. Not only is that happening on the MACD, it's also happening on the RSI, our relative strength index. All right, we have a peak here from 2011. So this is a 12-year high that we're approaching and attempting to make a quad top, right? Where we have 1, 2, then we have 3, and then we also have 4 right here as well. So, we're seeing a lot of signals and signs that we could be reaching a top, whether it's a short term or whether it's a little bit of a medium or longer term top on General Electric. I don't have any positions in this, but this is just something that is on my watch list right now. Another one is McDonald's, ticker symbol MCD. This is the weekly chart. And one of the reasons why is because we broke through this bearish divergence trend line that we had, right? So we had highs here, lower highs here, but meanwhile, the stock was going up in price. So that's a bearish divergence. We did see a slight drop afterwards, right? From the 281 down to about 260. But here recently, we just broke out of this trend line. So if we can get a breakout retest and continue to push up higher on the weekly time frame, McDonald's could still stay bullish, right? We have a little bit of a bullish channel here, and it may not be a smooth ride straight to the upside, but there is a chance that McDonald's could, potentially go up to 295, maybe even $302. So that's something that I'm paying attention to. We just have to be mindful of the look above and fail that I mentioned. So, if we come up here and get this false breakout and we aren't able to retest the trend line and bounce, and rather we come up and then, we actually start trading back below in this range, that's going to be kind of a bearish signal and suggest that we could come down and actually test the bottom of this bearish channel and most likely come down around the 250 region. And that'll be a really critical point to see, all right, are bulls going to step back in around that $250 price level and push things up higher? Or, are we going to see things continue to go down? Now, the weekly MACD just gave an entry signal here, and we've already moved up a pretty significant amount, about $20. The last time we had a MACD entry signal, we saw a strong push to the upside there as well. Same thing over here, MACD entry signal, strong push to the upside. So that's something that I'm going to be watching for. Have to be mindful of the MACD exit signal right here as well. We got an exit signal here, and then we saw that drop to the bottom of this channel here. And so, if we end up getting the MACD crossover to the downside, and if we end up getting the look above and fail scenario, then as I mentioned, most likely we're going to come down to that 250 region on McDonald's and, test the bottom of this channel here. And, we could even break it, or we could bounce and continue up the bullishness. McDonald's is a really good stock in recessionary fears. That's why this stock is actually making new all-time highs. So, I know we went over a couple bearish scenarios on some things. There's always a bull market somewhere. There's been a bull market in McDonald's. NVIDIA has been super, super bullish. I mean, this stock has been extremely bullish. And it recently hit my 278 price target, and it started dropping a little bit, but we're still trading in this channel right here that we've tested a few times. So I'm really waiting to see, is NVIDIA going to break this channel? And that's really when I'm looking for the gap fill on NVIDIA right around to that 210, $215 region. But until we really break that trend line here, this thing is just so strong. It's been so bullish. It's been a really tough stock to short. I went short on it a couple times. Thankfully, I had some long positions as a hedge, to protect myself. And if I didn't have those hedges, I probably would have taken some significant losses on NVIDIA. But the bullish positions just really outperformed and kept outperforming. So
it's up 100% year to date. 100% year to date.
Yeah, bro, it's insane. It's insane. I mean, the NVIDIA is just wild, bro. And in my opinion, it's the most overpriced stock in the stock market right now, from a fundamental standpoint. When you look at the PE ratio and some of the things like that. But the market's very forward looking, and NVIDIA is one of the top AI companies right now. And we're currently watching the next bubble, guys. It's forming right now. That doesn't mean it has to pop anytime soon. The AI bubble can continue rallying, but AI is something that markets don't understand. They don't know how to properly price it in. It's just like the internet. When the internet first came out, people are buying anything related to the internet, anything that's got .com in the name, and they're pushing that price higher because they don't know the true value of the internet and where it can go. They just know that it's supposed to be revolutionizing. And so I'm not saying that Nvidia is like some worthless stock that's just a bubble. I really like Nvidia a lot, but just in general, any stock related to AI at all has really, really rallied tremendously ever since the start and inception of ChatGPT. And there's a good chance that as AI gets more popular, it's going to attract more money into investors. And that's one of the main things. Not only did Nvidia have a good earnings call, you can see here that they gapped up really big off of their earnings report. But after that, we consolidated in this little box right here. We had this period of consolidation, and ultimately we broke out from a lot of the AI hype and a lot of the Nvidia made some announcements about their AI and some of their
They mentioned
GPTs and things
AI.
like that.
I'm sorry, they mentioned AI 91 times on their earnings call. No,
Yeah, bro.
facts. 91 times. I think that was like, I think they planned that because 100% over the first quarter, that's crazy.
Yeah, bro.
91
Yeah. And
times.
everybody's just been trying to mention anything about AI. I mean, it didn't work out for Google. Google pretty much fumbled the bag. They had a
Mhm.
great opportunity to,
They rushed it.
yeah, but they rushed it. Their AI wasn't ready, and it made them look bad. And Google, they lost a lot of money, whenever Bard had that failure. So I mentioned these look above and fails a couple times. If we take a look, we do have this initial bearish divergence where Nvidia was making these higher highs. We were able to break through, bounce through there, but there is a chance that this could form an M pattern, right? We've actually started trading back below this range. So I'm going to be watching Nvidia closely and see if it breaks that trend line here. And if it breaks the 256 support level, there is a chance we get a gap fill down to that 220 to 210, 215 area. So those are just a few of the individual stocks that I'm looking at. If you take a look at the MACD, also bearish divergence, we have highs, higher highs, we have highs, lower highs, and the MACD actually just gave a sell signal, but I'm not going to jump into anything early. Or rush any positions, just that's one sign of confirmation. No one indicator is 100%, but once you can combine 2, 3, 4, 5 signals together, that's when you can really start having real confidence in your plays. That's when you can really give yourself an edge and increase your odds of success, because you're not relying on just one thing. You're not married to one indicator only. You're using all the tools that you have in your arsenal to really set yourself up for success. So that's pretty much it for the things that I wanted to talk about. Is there anything else that you want to get into real quick, Leon, or you
Yeah.
want to go over on your chart?
Yeah, I want to go over like two more things. Let me
All right, I'm
see.
gonna stop sharing real quick.
All
You
right,
can
cool.
take over.
So there we go. We got can you see that?
Yeah, it's up now.
Slash VX. Okay. All right, slash VX is the VIX futures. No, now if you know VIX, VIX actually goes the opposite way of the market, so it's inverse to the market. Market goes up, VIX goes down. Market or whatever stock. So Apple, everything. Once it's going up, VIX is going down. It measures volatility in the market. Used to be a good indicator for people to know if the market is going up or down. But on big days like CPI, PPI, and those data days, like sometimes it can get convoluted with all the volatility and it might not be a good indicator for some of those days. So we've went to the treasuries or the dollar to actually use as this use the same way we use VIX. Okay, so looking at VIX is right back on track right now. We're good. We're in good space right now. So what we're looking at right here, I've made a little box right here. That is where I see like liquidity. That's where I see it coming back down to, which it actually did. Let me just pull that up a little bit. Right about there. Yeah. So it grabbed that liquidity in there, and as you can see, it dipped its toe in there, came back up. So this is why I said that little box. If I take that box and I extend it to the left a little bit, let's go a couple months back. Let's go like January. Boom. All right, you'll see once we get in that box, every single time we bounce, every single time. So
Yeah, that's
boom,
a big
bounce
demand
out.
zone.
Yeah, boom, bounce out. Consolidation all in between here, which is cool because consolidation yeah, I mean, you're the scalp king, bro. Like, once it gets here, it's going to drop. Okay, boom, calls. Once it gets here, it's going to pop. Okay, puts. So that consolidation zone, pop back out, pop back out, pop back out big right here. So if you see March 9th, 10th, and 11th, if I go to the /ES, which is the S&P 500 futures, March 9th, 10th, and 11th, So you'll see that goes inverse to the market, and that's why we're looking for shorts or puts soon, because we're getting back down to this zone right here. If we happen to drop below that zone, you can see we already have a gap from 2021 right down here. And we got another one from 2020 right down here. So like, we would love to get that bullishness out the way, but I don't think we're going to get it right now. As you can see, my price target area is up here around 25. I think we can kind of get convoluted around this key area, 2287, and above, below that, 2171. I'm going to show you why I'm picking 2171, because once we make this box right here, boom, I'm going to scale down to the 4 hours so we can be a little more intimate. And now we can see that we're just consolidating, folks. We're just consolidating on VIX, which is why we're just consolidating in the market, kind of, sort of like we're going up, but on low volume. So it's not really an up move. And this VIX is, or VIX futures and VIX as well, it's just consolidating, meaning it's squeezing all of these small candles. It's squeezing, 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 and it's waiting for that move upwards. So it dipped its
Real
toe.
quick, it's a bullish divergence there too on your stochastics and everything. And there's 3 stages to a reversal. There's your downtrend, then you have that box consolidation, and then you get the uptrend. Now, there doesn't have to be a reversal, but that's the way that reversals happen, right? Is you have the downtrend, you have that box consolidation, and you can see, on your stochastics, we're building that bullish divergence. We're creating those higher lows on the stochastics, while the actual price of VX is making those lower lows. So, it's interesting stuff to see, so we're seeing a lot of signs that potentially we could be, having a drop coming. So ultimately, we just kind of want to prepare people for that. We're not screaming that the market has to puke. We are going to be prepared for a bullish scenario as well, but, we don't want a lot of people to, potentially be FOMO buying the top of a bear market rally, because bear market rallies are, they're very strong, they're very aggressive, and that's how they really sucker people in to buying into them, is because they're like, man, well, this stock already ran up 100%. I missed out on it. I gotta buy in now, and and then the stock drops 20% and they end up panic selling and things like that.
Yep. And we don't want to FOMO people into buying or selling, but we're just confident in the things that we see on the chart. It's up to you to do your due diligence. I call it 4D, deep dive due diligence. So that's up to you to do your deep dive due diligence and make your own trades. But what I can definitely say is we are definitely in that consolidation. And as Zach pointed out, we are in that bullish divergence right there. So
yeah, you can even extend that to the left, and it goes back even further. There's more lower lows when you zoom out on the chart. It goes all the way back to I don't know, to like the middle of your screen there.
right here. Right here.
Not well. I meant like March 21st area.
Oh, got you. Okay, yeah.
But yeah, so it's building up, so there's potential there for a spike in volatility in the volatility index, and typically that moves in an inverse relationship with the S&P 500 in the stock market. So not already only seeing some bearish signals possibly across the crypto markets along with the S&P. But we're also potentially seeing some bullish signals on the volatility index. So,
I want to actually look at it another way too, but you're right about that. And also the price target area, as you can see, 2287, and then around the 25 range. But if we go back down to the daily, you'll see that 2170, as I can see, is the breakout, right? So 2170, we could bounce down here, which is cool. If we bounce down here, that'll be your entry for, puts once again. And then you'll be looking for a breakout at 2170. If we don't break out, boom, you already got your entry for your puts, made money, you're in profit. If we break out above here, when we break out above here, depending on your expiration, because we don't like to play the 0 DTEs or like the very next day. Like if we know a move like this is coming, get like a week out, 2 weeks out, like give it time to percolate. Like what we always say is, your options are like a boat. All right. It's like a boat. So the further out your expiration is, your boat is cool. Your boat is fine. You floating, you're fishing, you're doing well. The closer you get to your expiration, man, them holes start getting poked in your boat. And the boat is your premium. The
Yeah,
boat
and it
is your
starts and
money.
it's sinking. Yeah, the boat
It's
is your money
sinking.
and it's sinking.
The closer you get to that expiration, you got 13 holes in your boat. You trying to stay afloat like, buddy off of Titanic. It's crazy. So we want that, nice little yacht or, that nice boat experience where we could just fish and we got like 2 weeks out or whatever the amount of time that we think the move might need. So yeah, if you see a move like this coming and on Monday, okay, you know what? Let's see if it breaks below here on Monday, because that could cause us to once again reach these gaps from 2021 to 2020. I don't think it has the steam for that. I think we're going to fake it out. I think we're gonna fake down here, which is gonna cause the market to rise on Monday. We're probably gonna fake a bull trap, and then we're gonna snap back into here before close. So I think once we try to snap back into here before close, that'll be the ideal entry. And also, if we look at it on the daily, you'll see it's almost like like somewhat of a falling wedge. All right. So if I wanted to take this right here and I wanted to just attach that right there, that would make that the matter of fact, I could put it a little further back. You know what I'm saying? And that would make that my falling wedge right there. So if I wanted to take this high, just another way to look at it. And matter of fact, I wouldn't take that high. I would take this one. Boom. And take it down here. Yeah, and then I would look down on the maybe 4 hour. Boom, you see? Boom, respect it, respect it. Yeah, so that would probably be the breakout right there. If I wanted to go that route. But on the daily, you'll see how once again, my bad. Once again, that area down here, what did it retest right here on March 21st? That same area that breakout is at, like that same area that they're trying to get above right here. That's what it retested over here. Couldn't get below it. That just popped right back up. And then it got below it just now. So that's why we're having trouble, because we're trying to get above this level that this couldn't get below. So once we get above that level and get above 2170, it's off to the races. So that's what I see on VIX. So that's why we're saying, it could possibly be a bearishness coming soon, which would play into the Wyckoff schematic, and which would play into, the drop, which will play into the bottom, which will play into us making money on the way down and on the way up. So GDRX, good RX. I like the chart. I like the company. I like what I'm seeing because, well, actually, let me show you on the macro right there. That gap right there is around like $25, $26.
Yeah, that's a
Okay.
big boy gap right there.
Yeah, and if you know anything about like when financials start to peak and start to, decline, that's when, healthcare stocks and what are some other ones? Healthcare stocks, consumer staples, that's when they start to, start to go up and reach their peak. So this is one of the healthcare stocks,
Yeah,
good RX.
GDRX is a healthcare stock for people that don't know, and it typically, heading into these recessionary cycles and also, during the next cycle rotation, the healthcare stocks tend to perform pretty well, and so that's kind of what we're seeing here.
And as you can see on the daily, I have that falling wedge right here, simply because we see that declining volume in the sell. So we got that big pump in volume for the bulls, but once it starts selling, the volume declined. You can clearly see when I zoom in, declining volume. So let me delete that. Also, we have a bullish divergence on these stochastics right here. Let me delete that. Bullish divergence right there in the stochastics. So lower high, lower low, higher low, that's about to cross over into stochastics, higher low, lower low. So over here, we're looking at the trend line, and we can zoom into the maybe 4-hour or 1 hour chart. I'll go 1 hour, and look and see where our breakout would possibly be. Sometimes when I zoom in, the trend line will be a little off, but it'll be around like $6 would be probably the breakout. Okay. So around like $5.95 or $6 would probably be the breakout. If I'm looking on a macro level for the monthly, I like what I'm seeing because I know, let's say on a macro level, that's all I'm looking at. I'll take this right here.
And that's that box
And
consolidation right there.
that's that box right there. Once it gets above this level right here, which is $7.40, bro, you're all it has to do is go up $7 for you to be up 100%. And once again, we already know how this is going to go with the healthcare stocks within the next couple of weeks or within the next month or two. So it's only $5 per share. That's like 100 shares for $590. If you wanted to buy 500 shares, you have 1,000 after it goes to $10 or $11 or $12. But also if you wanted to get 100 shares at $5 for 500 or 600, you can sell calls, puts, like you can do a lot of the strategies that Zach tells you on the channel. So it's up to you to decide how you want to play it, or you can grab, matter of fact, let me zoom into my other screen. I'm gonna stop share and share again. Okay, so let's go over here. Or you could, let's see, GDRX. You can do one, go a trade. You can grab January 2025 calls at the money for $200. At the money, 2 years out, $200,
The in the money
$195.
ones, bro, are
Crazy.
like $250. I mean, that's
200,
not even bad, bro. And then you're already in the money.
2 years out.
Yeah, that's wild. Yeah, that's cheap.
Yeah.
That's cheap for sure.
So that's the last thing I got, bro.
Okay, well, it was a good session. Tom, I'm gonna unmute you real quick. If you want to ask any questions real quick, while we got you on here. Hold on.